Right now, as we look at the live charts, SoFi Technologies Inc. is trading at exactly $26.44. That represents a green move of roughly 0.20 cents or 0.76% on the day. When you look at the intraday candle structure, we are seeing a consolidation pattern near the top of the session's range, which usually indicates that buyers are stepping in every time the price dips even a few cents. The volume profile today is consistent, showing steady accumulation rather than the erratic spiking you might see during a pump-and-dump scenario. This is orderly capital flow. We are not seeing the chaotic volatility that often scares retail traders out of their positions. Instead, we are witnessing what looks like a sustained floor being built at this $26 level. If you have been watching the order book, you might notice that the bid-ask spread is tightening, suggesting that market makers are finding equilibrium after the morning's initial volatility. This price action is significant because it sits right at the psychological inflection point. For months, the market has treated this zone as resistance, but today the price is holding above it, signaling a potential flip from resistance to support. The expectation from the general public and the casual observer is that SoFi is simply a student loan refinancing app that got lucky during the fintech boom. The common narrative is that its best days are tied to interest rate cycles and that it is destined to struggle against legacy giants. People assume that once the hype fades, it will crumble under the weight of regulation and competition from established banks. That is the expectation. A niche lender with a slick app. The reality, however, is far more disruptive and mathematically compelling. What we are actually looking at is not just a lender, but a fully chartered national bank that owns its own technology stack, a rare combination that allows it to operate with a cost structure that legacy institutions cannot match. While the market expects a simple financial services company, the reality is that SoFi is rapidly becoming the AWS of Fintech through its Galileo and Technisys integrations, powering the very competitors that are supposed to be beating it. This disconnect between the limited public perception and the sprawling vertically integrated reality is where the alpha lies. The market is pricing SoFi like a risky consumer lender, but the data suggests it is transitioning into a technology infrastructure behemoth with a banking license attached. This mismatch forces us to look closer at the numbers. When you analyze the recent stock movement, you have to compare the retail sentiment here to what we typically see with high beta names like Tesla stock or Nvidia stock. In those cases, price action is often driven by pure momentum and hype cycles. With SoFi, the recent upward drift has been supported by institutional loading, which is a very different signal. We are seeing a divergence between price and the Relative Strength Index, or RSI, on the 4-hour chart. While the price is making higher highs, the RSI is cooling off, which is actually a healthy sign of a trend that is sustainable rather than one that is overheating. If you are engaging in online investing or looking for investment help, understanding these technical nuances is critical. Most investing sites will give you a simple buy or sell rating, but they rarely explain the liquidity dynamics underneath. The current price of $26.44 is not just a random number. It represents a battleground where the bears are exhausted. Short interest has been high in this name for a long time, and as the stock grinds higher, those short positions are being forced to cover, creating a mechanical buying pressure that has nothing to do with the fundamental news of the day and everything to do with market mechanics. Let's talk about the landscape of online investing and where SoFi fits in. If you are a retail trader, you have likely tried various platforms. You might have started with Robinhood stock trading because of the interface. The Robinhood app revolutionized how easy it is to place a trade, and features like Robinhood fractional shares brought investment to the masses. However, as investors mature, they often look for more comprehensive solutions. This is where the comparison gets gets interesting. A user might graduate from Robinhood Investments and look for a platform that offers more robust banking features. They might consider Fidelity Investments. Fidelity is a powerhouse. When you look at Fidelity ETFs or Fidelity mutual funds, you are seeing trillions of dollars in assets. The Fidelity brokerage services are top tier, and Fidelity Wealth Management is the gold standard for high net worth individuals. Even the Fidelity mobile app and Fidelity trading platform have improved significantly to cater to younger investors. But here's the nuance. SoFi is trying to bridge the gap between the gamified ease of Robinhood and the institutional trust of Fidelity. For the sophisticated trader who requires advanced tools, Interactive Brokers is often the destination. Interactive Brokers trading offers global access that is hard to beat. The Interactive Brokers platform allows for complex option strategies and algorithmic trading that SoFi Active Investing does not yet fully support. Users who care deeply about execution speed and margin rates often flock to Interactive Brokers stock trading because the Interactive Brokers fees are incredibly competitive for high volume. Moreover, the Interactive Brokers account structure is designed for the professional. So why is SoFi capturing market share? Because for the vast majority of people, they don't need the complexity of Interactive Brokers, nor do they want the legacy feel of a traditional bank. They want a super app. They want their checking, savings, loans, and SoFi stocks all in one place. They want SoFi ETFs and the SoFi Robo-Advisor to handle their passive money while they take a few swings in SoFi Active Investing. This consolidation is the key value proposition. Now, I want you to take a second and comment below how many shares of SoFi you currently hold. Are you holding for the long term, or are you trading these swings? Let me know in the comments. Let's examine the business model, because this is where the reality part of our thesis really shines. SoFi is not just a front-end interface. Most fintechs are just marketing wrappers around another bank's balance sheet. SoFi went through the arduous process of obtaining a national bank charter. This was a pivotal moment. It means they can hold their own deposits. When you deposit money into SoFi Money or their checking accounts, they don't have to pay a middleman. They can use those low-cost deposits to fund their loans. This expands their net interest margin, or NIM, significantly. When interest rates are high, they earn more on the spread. When you look at Schwab Intelligent Portfolios or other intelligent portfolio options, they are great products, but Schwab has been dealing with cash sorting issues where investors move cash out of low-yielding accounts. SoFi, conversely, has been attracting deposits aggressively by offering high APY, effectively stealing customers from Chase, Wells Fargo, and even Fidelity IRAs, where cash might be sitting idle. The second pillar of their business is the technology platform, consisting of Galileo and Technisys. Think of this as the infrastructure layer. When you use a neobank or a fintech app, there is a good chance Galileo is processing that transaction in the background. SoFi owns this Rails system. This means they benefit from the growth of the entire fintech sector, not just their own user base. It's a hedge. If a competitor arises, they might still be a client of Galileo. This B2B, or business-to-business component, is what justifies a higher valuation multiple than a standard bank. A standard bank trades at maybe 1 to 2 times book value. A tech platform company can trade at 10 or 20 times revenue. The market is constantly struggling to decide which bucket SoFi belongs in. Is it a bank or is it a tech company? The price action at $26 suggests the market is starting to price it as a hybrid, which is bullish for long-term holders. We also need to address the crypto aspect. Robinhood Crypto was a major driver for their user growth. SoFi has also integrated crypto, allowing users to buy Bitcoin and Ethereum alongside their individual brokerage accounts. While they recently had to adjust their crypto operations due to regulatory scrutiny, the fact that they offer this alongside traditional banking is a stickiness factor. It prevents users from leaving the app to go to Coinbase or Robinhood. The goal is to increase lifetime value, or LTV, per member. Every time a user adds a product, a credit card, a mortgage, and invest online account, their profit margin on that user skyrockets because the customer acquisition cost, or CAC, was already paid. This financial productivity loop is the term management uses, and the numbers show it's working. Cross-buying rates are increasing. Let's look at the competition with SoFi Invest more closely. SoFi Invest offers both automated and active investing. The SoFi Robo-Advisor competes directly with Schwab Intelligent Portfolios and Betterment. It rebalances portfolios automatically, which is a huge draw for the set-it-and-forget-it crowd who want self-investing without the stress. On the active side, they have added margin trading and extended hours, features that bring them close